Welcome to weekly view on markets. Nifty gained further 1.71% during this week over the last week's gain of 2.3%. Market rallied on Friday after US Fed cut the rates by 0.5%. Bank Nifty and rate sensitive sectors gained the most during this week. Small cap sector consolidated as this sector has rallied earlier. Chart structure show bullish pattern and indicate further upside in the market in the coming week. MPC meeting will be held in the first week of October, and we can expect a rate cut in India as WPI and CPI based inflations have cooled off recently, and they are below the RBI target level of 4%. Good monsoon season will help to bring down the food inflation, which is the major factor in causing higher inflation in India. Markets may rally further in expectation of the rate cut in India in the coming weeks. Banks and rate sensitive sectors are the preferred sectors for the short and medium term investment at this point of time. Now let us look at performance of indices during this week. Nifty closed at 25,790, that is the record level. It gained 434 points, gained about 1.71%. Bank Nifty closed at 53,793. That is also a record high. Gained 1,855 points, that is 3.57%. Because of the rate cut and in expectation of the rate cut in India, Bank Nifty rallies the most during this week. Mid cap index closed at 60,208. It gained 174 points, that is 0.29%. Small cap consolidated with a loss of 173 points, closed at 19,332. India VIX study at around 12.79. Let us look at various sectors. Realty sector gained the most, that is 4.55%. Private banks gained around 3.78%. NBFCs gained 3.38%. They are all the rate sensitive sectors. Auto sector gained about 2.22%. Consumer durables, energy sector, infrastructure, FMCG, all these sectors gained between 1 to 2%. Commodities gained about 0.51%. Metals gained about 0.36%. Other sectors consolidated, and information technology sector lost 2.74%. Media sector lost about 2.62%. Pharma and public sector stocks lost about 1% each. There were more advancing stocks than declining stocks. Overall market breadth and market momentum was positive, and this momentum is likely to continue in the coming week as well. Let us look at the chart structure and the chart patterns. This is the daily chart of Nifty. We can see Nifty has formed on Friday a big green candle, and this pattern is called a flag. A flag is a bullish pattern. So we can expect further upside in Nifty in the coming week. This is the chart of Nifty mid cap index. On Nifty mid cap index chart also we can see a kind of triangular formation, and a breakout above this formation indicates a bullish pattern, and further upside is expected in Nifty mid cap index also. This is the chart of Nifty small cap index. This index is trading in a channel, and it has touched the highest end of this channel, and again we have seen a correction. Now a green candle has appeared. So considering the overall bullish sentiment in the market, I expect Nifty small cap index also to rally in the coming week, and it has to cross this resistance line. After that, we'll see further upside in Nifty small cap index. This is the chart of Bank Nifty index. We can see here a kind of rounding bottom formation. This formation is called a rounding bottom, and which has got a bullish implications. And Bank Nifty has crossed this bullish rounding bottom pattern resistance level, and we can see this green candle above the line. So this bullish pattern indicates further upside in the coming week in Bank Nifty as well. Now let us look at some of the market fundamentals. There was US Fed meeting in this week, and they cut the rate by 50 basis points, that is by 0.5%. This has triggered a big rally in all global markets, and accordingly in India also we have seen a huge rally during this week. RBI MPC meeting is expected to be held in the first week of October, and we may also see a rate cut in India. This rate cut will further give a rally in the markets. Forex rate is at 83.56 per US dollar. US dollar index is at 100.74. So we the rate cut will definitely help the rupees to strengthen from about 83.96. It has come down to 83.56. So if there is a further rate cut in India, we will see rupee strengthening. RBI forex reserves is at 689.4 billions. It is at a record high level. Brent crude price is at $77.41 per barrel. The lower crude price is also helping inflation to come down in India. So if crude price remains at low 80 level, it will help RBI to reduce the interest rates. Gold price is at 74,014 for 10 grams 24 carat. In the coming festival season, we may see demand for gold ornaments and gold price is likely to remain at elevated levels. FIIs have been buying in recent weeks, and this week they have bought 11,518 crores in equity. DIIs have sold for the first time in this week about 635 crores. So FII buying is supporting the markets, and on Friday itself, FIIs have bought 14,064 crores. That means in the beginning of the week, FIIs have sold, but on Friday they have bought a huge quantity. So if India also cuts rates, interest rates, then we'll see further money coming into Indian market. So FII buying may continue. Investors are advised to remain invested. The macroeconomic fundamentals are quite strong. India's GDP is expected to be more than 7% during this year. So, because of all these things, investors should remain invested. They should not book their profits early. And mutual fund investors should regularly invest through SIPs. They should not worry about day to day volatility in the market. So, a lot of further upside is expected in coming 1 or 2 years because of the strong economic fundamentals and GDP growth in India. So investors are advised to remain invested, continue their SIPs, and get the benefit of India's growth story and create wealth for themselves. This is all for this week. If you like my video, please subscribe to my channel. You can refer to your friends. You can ask your questions, which I'll reply. We'll meet again next week. Thank you.